Joining us now, I am thrilled to say we have Acting Labor Secretary Julie Su, along with our own Annmarie Hordern. And it's great to have you with us. Obviously, a big reaction to this jobs report. So we had a 114,000 increase in payrolls. You actually spoke to us back in June and said that we were looking at the definition of a soft landing. As you parse through these numbers, would you still say that today?
Hi, thank you. It's so good to be here. I mean, we, look at the three-month average. The three-month average in growth is still 170,000 jobs. Remember, we spent a year talking about how the numbers were too high and too hot, and we had always planned for a transition to a more sustainable, steady level of growth. This number did come in below expectations. It's still over 100,000 jobs. It's still broad-based. We saw growth in multiple industries. We saw it in construction. We saw it in healthcare. We saw it in leisure and hospitality. There was a dramatic drop in one industry, information. But generally, this is an indicator of continued strength in the economy. And when you look at other things, including labor force participation, which is at an all-time high for prime age workers, and we continue, know that there's continued work left to do to make sure that we maintain a strong economy. But we're still at a three-month average of above the number that President Biden said a year ago we need to be to have a sustainable, strong labor market in a strong economy.
The unemployment rate came in at 4.3%, and Claudia Sahm has already said that this has now triggered the Sahm rule, which basically means we potentially are on the cusp of a recession. How concerned are you in the White House about that?
Well, we're not concerned about that specifically, in part because the unemployment rate that it grew from has been so historically low and has been so historically low for such a long time. I believe even Claudia Sahm herself expressed some questions about whether the rule applies when you start at 4% or just above 4% unemployment rate. So again, we have to keep in mind, these numbers come in not in a vacuum, but as part of a overall picture of an economy that we've been talking about for some time that did not happen by accident, that was not inevitable, in which there's been tremendous growth and an economic recovery that is, frankly, the envy of the world. And so we know that the work is not finished. We know that you don't get. We don't stop doing the work that we've been doing. But one example of the effectiveness of the president's economic policies is that some of the growth is being driven by private investment into areas in which the president's Investing in America agenda has brought in public investments. And so those investments continue to hit the street. We'll continue to keep delivering them in different communities, and we'll continue to watch the numbers.
And of course, we're continuing to watch the numbers. We're also watching the stock market reaction right now because we're seeing a big wipeout in futures. And the conversation that's happening among investors, among market participants, is this concern that the Federal Reserve is behind the curve, that they waited too long to cut interest rates. Is that the view of the White House as well?
I mean, we don't comment on Fed policy. I know they have, they've indicated plans and what they are likely to do. We still believe that this is an economy that, again, did not recover by accident, but also is one that reflects, the Biden-Harris commitment to working people. The real wages remain up over the year. They're still higher than the rate of inflation. This, as I've said over and over again, means more money in the pockets of working people. And some of the story that's not part of the labor market data is that we continue to see more workers join unions, more workers reach first union contracts, more contracts result in record wage increases. Those are all further indicators of what we believe is essential to a strong economy, which is that working people do well, working people share in the profits that they help create, and working people get a voice at the table.
We had Governor J.B. Pritzker, though, yesterday talking about the loss of manufacturing jobs in Illinois, calling on the Federal Reserve to move. If the White House is not going to take a stance, I imagine more Democratic leaders are going to come out and also say that this partially may blame the Fed because it is an election year and they don't want themselves to be blamed. How concerned are you that Fed potentially acted in a way that means that more Americans would be losing their job?
I mean, manufacturing is a good example, right, of something President Biden has said from the very beginning, that we need to bring manufacturing jobs back to the United States. We need to make sure that the iconic industries like the auto industry that have powered this country's middle class continue to do so. Illinois is a place where, due to the UAW's historic contract, the President and I traveled to Belvedere, Illinois, talking about factories that are going to open that have been closed for a really long time. These reversals of decades-long trends that were not good for workers, that were not good for unions due to failed policy of the past cannot be reversed overnight, but we are seeing movement. And so that progress.
But Julie, many industries barely grew. Manufacturing, retail, information, all negative over the last 2 months.
If you look at manufacturing, since President Biden came into office, those numbers are up, and there's continued investments that we are making. If you look at construction jobs, those are also up. Those are two areas in which, again, federal investments are helping to drive that change, helping to drive that growth. And so we don't make too much of any one month, but when you look at the trend, those are both sectors that are up. Doesn't mean we don't have more work to do. Doesn't mean there aren't communities that remain devastated from failed economic policies of the past, that have failed working people, that have left working people behind. We remain committed to doing that work, and the overall numbers still demonstrate growth there, and we'll continue to put dollars into communities to rebuild them and bring jobs back.
And parsing through these numbers, it did seem that manufacturing payrolls did add 1,000 jobs last month. But to Annmarie's point, that comes after 2 straight months of declines. I want to talk about revisions here, because on the top headline number, there was another revision to last month's number. And we've seen that increasingly over the past several months, that the prior month's numbers are revised down. And I'm curious what your thoughts are as to why that dynamic is unfolding. Because, again, the question among investors is, how do I trust these numbers?
Well, you noted at the top that this month's revisions were fairly minor. Revisions, I always say this too, are a feature of the numbers, not a bug. It's not an error. It's basically continuously these numbers get revised because it's the trade-off between getting out numbers quickly and getting complete numbers. So to get the numbers out every single month, as we do, it requires a certain amount of projection. And then once the real data comes in, because these aren't just numbers, these are actual people, right? They're people who respond to surveys. They're people who answer questions. They don't always answer them at the time that I come here to talk about it, and that's why we revise when we get the more accurate numbers. That has always been the case, and that is why the BLS data is the gold standard when it comes to labor market information.
If we have 4.3% today, where do you see the unemployment rate year end?
Well, I'm not going to make a prediction about that, but I will say, again, we look at everything in the context of the whole. And so GDP remains very strong. Layoffs remain relatively low. The labor force participation rate remains high. All of these are counter indicators. They're not indicators of recession. And so, of course, we keep an eye out. Of course, we have to keep on doing the work that we are doing. We do want the economy to reach a state in which there's more steady, stable growth, and the 114,000 a month. There were in the last administration 7 months of numbers that were less than 100,000, and so again we're in a transition period. We've always said there would be. That was part of the plan. This number is cooler than expected, and so we have continued work that we need to do. And the investments in the President's Investing in America agenda are going to be really key to continue to power our strong economy.
Well, we have to leave it there. Really appreciate your time on this busy morning. Our thanks, of course, to Acting Labor Secretary Julie Su and, of course, Bloomberg's Annmarie Hordern.